My name is Dimitri Speck. I'm specialized on financial analysis, mainly with statistical background, for instance, seasonality or intraday pattern, but also some macroeconomical analysis I'm doing as well. And for instance, one outcome of this analysis was the date to figure out the date of the gold price suppression when it started. It was on the August 5th, 1993. Let's first start regarding the outlook of the economy on where we are financially. Financially, the world is indebted like it was never before, in my opinion, in peace times. It's about 250% debt to GDP in total, meaning not only public debt, but also the debt of the private sector. And this is not sustainable. It was not possible to reduce it when the debt was lower. So there will be some writing off the debt, let it be through inflation, which is my main scenario, or let it be through deflation. But in both cases, it will hurt the economy worldwide quite significantly. Regarding the gold price suppression, I found out through intraday pattern that it started on August 5th, 1993. And with this date, I had a deep look into the scripts of the Federal Reserve Bank and found some additional hints why Greenspan and his colleagues had the idea to suppress the price of gold. To be more precise, to keep it at that time below $400 the ounce. And the background was gold is a competitor to the credit-based fiat money. And Greenspan wanted that the price expectations are not rising. And for that, this was at that time the main reason he decided to keep the price away from rising. And other central banks were also in the boat at that time. Yeah, so this is how it started. And with my statistical background, I could figure this out. I did also find suppression in other markets like the fixing manipulation in gold, silver, and platinum as well. But I also went more and more deeper into the sources. Like I already mentioned, the scripts from the transcripts from the Federal Reserve Bank. And that finally led to this book, where everything is written. And this book was read even from central bankers, what I know for sure. And there are so many facts that it gives a quite clear picture what really happened. But I must admit, also other people added, of course. There's, for instance, the Garter, which collected material since years, and other people as well. The first publication about the gold price suppression was in 1995. So it has a long history, and the whole gold price suppression itself has a long history. So the people who are doing it changed over the time. Now it's more the private sector who is suppressing the gold price and not so much the central banks anymore. And also the motivations are different. In the beginning, it was inflation expectation which should not rise. To change the mentality and the psychology of the savers and the people. And later it became, for instance, during the euro crisis, there were other reasons to suppress the gold price. It was simply to give the impression to the people that their banking accounts, which were confiscated in Cyprus, and everybody in Europe usually feared, maybe my country is the next. And at that very point of time, they let the price of gold dropping more than $200, and this gave the impression that gold is also not safe, so the people can let the money also on their account, and it worked. So there are several reasons why to suppress the price of gold and how to do it. For instance, the fixing manipulation has ended already. This is one clear example which can easily be proven, that there were many drops in the fixing of the gold price in London, the afternoon fixing mainly. Yeah, when this is a kind of reference quote for other businesses as well, and this does not exist anymore. Yeah, this is changing. Also, the suppression through lending and selling of gold from the storage of the central banks. This has also ended. Yeah, so the times are changing, but the gold price suppression still exists. The thing about the most recent manipulation of gold is that we don't have that much material anymore where we can prove who is behind currently. This is different from the 1990s, where we have more material that we can prove better. But this material simply does not exist. What we still can see are price patterns, which are typically for the price suppression. You must know the following thing. Gold is not a good like crude oil, for instance, which is being used in average life. It's a store of value. Yeah, and so if you would manipulate the price of crude oil through the futures market, the people would simply drive more with the car, and so in the spot market the price would rise, and finally the effect would be the opposite. But for gold and also silver, if you suppress the price of gold and also silver, you are telling the investors and the people who are interested investors it's a bad investment, and they move out of the market. So in gold and silver, the suppression through the futures market can be successful, at least for a limited period of time. Yeah, and this is why one means of suppressing of the gold price is through the futures market, to let the gold price suddenly drop, for instance, by $10, $20, often within seconds. And this still exists, this pattern, and so we can assume for almost sure that the gold price suppression still exists. Yeah, but we don't have currently the documents which we have from the 1990s. The background why we have less transparency now compared to at that time is when the gold price suppression started in the 1993 and later, they simply made more errors, which is normal if you start with something. So they said it not only outside the meetings, they also talked within the meeting of the Federal Reserve Open Market Committee. Yeah, so this is why we have, for instance, from there more information, but also from other sources, and this has stopped. Yeah, this is clearly not that visible anymore at the moment. The second is we have a much higher gold price now than we had at that time. So the gold price suppression itself does not play that big role, I think, like it did at that time. So the gold price suppression might start very intensively again in case of crisis. Yeah, but I think, to be honest, the last big effort to suppress the gold price was during the Cyprus crisis in 2013. Yeah, when they caused the gold price to drop significantly. Since then, there are here and there gold price suppression, but for instance, in the 1990s, they also sold a lot of gold and did through leasing also a huge quantity came on the market from the central banks itself. This has stopped. Yeah? And without physical gold, yeah, the central banks will not be able to keep the gold price down for many years anymore. So no gold investor has to fear the gold price suppression, in my opinion, anymore. So there is still, but the effective is reduced, and it can only be effective as long as other investments are attractive. Yeah, and the bond market is not attractive anymore because the yield is lower than the inflation. So we have so-called low or negative real rates. And the stock market, in my opinion, is at the limit. We have a very high, for instance, market capitalization to GDP in US, like in the year 2000. So there is no other attractive market anymore. So in my opinion, the gold price should rise and the gold price suppression cannot stop the rising of the gold price anymore. And I expect in the next 5 to 10 years much higher prices. The thing is, the gold price suppression did work in the past and did change the behavior of the investors. And because of this, much less investments had happened until now into gold. So without gold price suppression, we would have a wholly different world. It's not only about where the gold price would stand. It would stand, of course, much higher. But the gold price suppression gave the savers the impression that the financial system is stable and okay, which it is not. Yeah, and this gave the whole financial sector and the states and the central banks the possibilities to increase the indebtedness even more and to increase the bubbles much higher than it had been possible if we would still have if we had a free gold price. This is something, in my opinion, almost all people underestimate, even the so-called gold bugs people who are much interested in the field of gold. It's not only about the price level of gold. The gold price suppression changed the whole financial world. Gold is a competitor to our credit-based money, and the level of credit, the level of debt, has been increased much higher than it could have been if we had a free gold market, which would openly show how critical the financial situation is. Yeah, this is, in my opinion, one very central point. So gold would stand much higher if we would not had gold price suppression, but also the level of debt, we would never had gone that far, in my opinion. Yeah, so we would live in another environment. Look, regarding the next recession, which is in front of us. Historically, we are first time worldwide on a system which has no connection to gold anymore. Second, for the first time in history, we have yields at the level up to zero and even below, for instance, in Germany. Yeah, so you can see we are really, the whole financial world is manipulated, not only the gold market. And this manipulation of the financial world is in any historical comparison at limits. Yeah? So I fear and I assume that the next crisis will solve, so to say, the overdebtedness of the world. And that means that the savers get rid of their savings and that we get, in my opinion, an inflation, not a deflation, but this is still open in this process, and a much higher price of gold. So we have a different situation compared to the situation in front of the financial crisis 2008. Yeah, we are at limits, and I don't see that the next crisis will just like 2008. It will be worse because of we are more indebted, and we are with yields and everything much more at the limits. Whether we will get in the next crisis a hyperinflation or just a big inflation depends a lot on the politics. Yeah? In my opinion, we will get a strong inflation at least. Yeah? And during the strong inflation connected with some bankruptcies of banks and some really negative real rates, the savers will get rid of some of their savings. That's, in my opinion, a likely scenario and maybe even the best. Whether this strong inflation will get out of control and lead to hyperinflation is finally just a political decision. Yeah, this is you can avoid a hyperinflation, yeah, even in our bad financial system, when the politicians make the right decisions, but this is very unlikely. So there might be a hyperinflation. I cannot say that it will not happen. I'm strong in favor of physical gold, yeah, because I think that's a core characteristic. If you see gold not only as investment, but also as, let's say, security if the financial system gets problems, then you should have it physically and not just in the banking system. For me, I think there are many rumors out that the ETFs don't have the gold they claim to have, but I have no proof that this is not the case. But this is for me not the reason not to invest into ETFs. The reason is simply you should gold as last investment for the real worst case, not just as normal investment. You should have close to you in some treasure and not in the banking system. Look, currently the price of gold is not only being suppressed, there is also simply not that much demand because other investments did well. Real estates and stock market and also the bond market. You lose ongoingly a little bit money, but there was no big problem like it was in historical times. When this changes, and in my opinion it will change in the next crisis, we will have a lot of demand coming from the existing savings. And as I told you, 250% to GDP is the world debt situation, and it's also the world, so to say, fiat money situation. So the savers will shift some of this money into the gold market. And looking at historical level, it can rise about 10 timefold in real terms. Yeah, but this is not a matter of 2-3 years, it's a matter of 10 years plus. It depends also how long this whole strong inflation scenario will last. Yeah. So in my opinion, the gold price will rise also in real terms, and this is a huge advantage of gold compared to other assets. Also, companies or real estates are real assets, but they will not rise like that. They will even fall in real terms in a strong inflation scenario. Only gold and silver will be here different. I read, I think in the year 2000, a small statistic how the gold price movements behaved during the New York trading compared to the other time of the world. And this the author claimed that it is connected with suppression of the gold price. And as I am statistically interested, I extended the research, developed a small formula how to prove it better. And this led to my first article, and that I found the date when the gold price suppression started in August 5th, 1993. And I improved the statistics. I figured out that, for instance, the fixing was manipulated, published this statistic first in 2001, so far before it became, before it made it to the mainstream media. And during this research, I decided to write a book. To finish this topic. And I started writing the book finally with the idea to put all together what I found until that time. But it ended that I did find much more while I was writing this book. Yeah, it was, I found here one source more which proved the gold here quote. I did additional mathematics, for instance, to figure out how much gold was in lent from the central banks because there were no figures, so I had to develop a formula to figure this out and. Yeah, and then for me the topic was not totally settled, but I had enough proof, and until now everybody up to central bankers and so on did find this book okay, except of one or two reviews which I had, one in UK and one in Switzerland, by the way, who were a little bit critical to the conclusion, but not every journalist who writes about a book is also reading it totally. Yeah? So in total, I had very good reviews, also in the mainstream media, up to TV in Germany and so on. So yeah, it's a matter of fact that the gold price has been suppressed, because the book is about the past, of course, and in my opinion is still suppressed. The motivation of the gold price suppression changes over time. It started with the inflation expectation. This was a core motivation in the beginning. And it changed, for instance, when it shifted to the private sector, it was more and more to make profits. Yeah, because through suppressing of the gold price, you can make profit, which is hardly known. But this is connected with the possibility first through lending, which has stopped, and the second through changing the price itself. I mean, if you suppress the gold price, and with some number of contracts, and then it leads that other investors go out of the market. You can buy the very same amount of contracts without rising the price to the same level. And with this, you can make profit. Also, if you manipulate the fixing as reference price for other contracts, you can also make profit. So these are motivations from the private sector. But the public sector, the central banks or people in the public sector can also be, for instance, the Minister of Finance, in US especially, but also in UK. They have the interest to manipulate, for instance, in crisis, how the people see the crisis itself. That they see, if they see gold dropping, they think the crisis is not very serious. That's a very simple trick. And so there are many motivations, and we will see what will happen in the future. In my opinion, the gold price suppression will not succeed anymore. I have a second field of interest, which is connected to the statistic of the gold price suppression. These are intraday pattern or other seasonal pattern like the yearly seasonality. And seasonality itself is a price movement which is based, if it's a serious seasonal pattern, on fundamentals. For instance, in the silver market or platinum market, also palladium, the price typically rises in the first 2 months of the year. Sometimes more than in the total year in average. And the reason is that this is an industrial material, silver, gold, and silver, platinum, and palladium. And the industry has the book open, have their plants open, and so they are buying it just in the beginning of the year. So we have here some seasonal pattern. We have them also in the stock market. For instance, individual stock can rise at specific days and dates in the year more frequently than in other because they are, for instance, earnings surprises, which are themselves result of, let's say, fairs or Christmas season, more orders, or also the calendar and so on. So Microsoft, for instance, has a tendency to rise in autumn. And these are seasonal pattern which can be used to analyze the market, but also to make some better entry points in the market or to make a trading strategy and so on. There are many possibilities, and this is why I also have a web tool, www.appseasonnext.com, where also private investors can have a look at seasonal pattern. Talking about moving your wealth outside of your home country depends a lot, in my opinion, of your individual situation. If you are well up and you can afford that parts of your wealth is abroad, it's, I guess, a good idea. If you have just some savings, maybe it's not so good idea because abroad the money is also not available for you, especially in the case of crisis. So it depends a lot of your personal situation. If you can afford to move some of your money abroad, I think it's a good idea for diversification. And to store some of your gold, for instance, also abroad. If you are a small saver, maybe it's better to have it close to you. This is my personal opinion. It depends also whether you have connections to other countries. If you are traveling a lot, it's much easier to establish also some bank account or some connection to, for instance, in the field of gold, to a storage company abroad, than if you're only in your home country. This is different from person to person. First of all, regarding the interest yield, we are in a similar situation like in the 1970s, but on a much lower level of the yield. That means at that time the inflation rate was higher than the bonds did yield, and we have the very same situation, but now at much lower levels. And there are also other differences compared to the 70s. For instance, in the 70s regarding gold, we had a gold bull market in 2 periods, which did which was much faster than now. It was from the beginning to 1974 and then to 1980. Yeah? And now the first up leg of the gold bull market was from 2001 to 2011. And now we are in the correction still, which has ended some 2-3 years ago. And since then, it's slowly rising again. And this is all connected, in my opinion. And talking about the yield, we are at the zero level, yeah, which is caused through manipulation of the central banks. That's clear. Yeah, and it's a very strange politics, in my opinion, as if I may say this, because there is a natural yielding. Yeah, since it's proven empirically through history that yield must be positive, and it has also a strong economic background, because an investor has a possibility to invest in some companies or in forest or whatever, where he can get some money out, and they're yielding. And so credit is also yield through history, and central banks are manipulating this now to zero. Yeah, this leads to a lot of malinvestments, to a lot of additional debt. So I'm strongly against this politics. Yeah, for the investor it means a different thing, and also for any person who observes economics, it simply means that the world is so much manipulated that I hardly see a possibility to manipulate it even further. It might be possible. Yeah, looking at Japan, where we have this low yield now since the mid-90s. Look at the Soviet Union, which could stay without free market over many, many decades. But if they are successful in manipulating the economy even much further, it will lead to a slow downtrend of many, many countries. My more likely scenario is that the next crisis will delete this financial system, in the sense that that we will have a new financial system with much lower debt. This is my main scenario, but as I told you, it's not for sure, of course. Investors, if they see the current situation, they must consider a few things. First, the recession signs are increasing. You see it in the world trade, you see it in Europe, you start seeing this in US. If we get a recession, usually also the earnings are dropping, the banks will have problems, and. So this is now the starting point for the next crisis. Let's put it clearly. Yeah? And the next crisis will lead to lower stock market prices, will lead to lower real estate prices, will lead to problems in the bond market. Yeah, maybe not in government bonds, but in all other bonds. Will lead to problems in the savings in the banking system, and will lead to rising gold, and especially, by the way, also silver prices, because silver prices are low compared to gold. And silver typically rises stronger in a precious metal bull market than gold, because we have much more above ground gold stored compared to silver. So if there is more demand for silver, it also typically rises. We could see it in 2011, I think. We could see it in the 70s several times, and so on. This will happen again. So my favorite investment would be gold and silver, but of course not the only one, yeah, because we can be wrong. That's very simple. We can have for 2-3 years a deflationary scenario, and gold and silver could even drop even more. I don't think so, by the way. But I cannot say for sure that it will not happen. Yeah, you can have, of course, some savings. Yeah, if you see at a deflationary scenario, it should be, of course, some safe currency, so to say. It cannot be the euro, because the problems are so huge. It shouldn't be the US dollar. For me, for instance, bonds of the Norwegian krone, the government, are quite safe for this scenario, and you can put it also in your portfolio. Yeah, as an example, the public savings in Norway are 175,000 euros per person in the pension fund there alone. I mean, this state will not go bankrupt so soon. So there are many people who think that there are some figures behind that, like in August 71, Nixon closed the connection of the dollar to the gold price, and in August 1993, let's put it this way, if a country goes away from the connection of the currency to gold, it's usually connected with war, nothing else. Let's make no mistake about this. It was in the First World War, and it was in the Cold War and the Vietnam War. This was the reason for Nixon to skip the connection to gold. Yeah, and he needed it at that time because the US was losing too much gold. And the connection to war is quite proven also in documents. For instance, in 1967, the US clearly said that the German Bundesbank has to stop to buy gold and has to take government liabilities from the US, because otherwise, because the US wanted that the Germans pay in this way for the military. Yeah, so there's always a strong connection. In 1993, the connection was not war. That's very interesting. It was more or less connected with the inflation expectation, and I assume also with the political situation in the US, because Greenspan at that time supported Clinton, who wanted to pass a law through Congress to reduce the debt. So the motivation at that time was, so to say, morally good from Greenspan. It's crazy that I say it because I'm strictly against the gold price suppression, but he tried his best to give Clinton the sign that everything is under control and that there will be no recession, and he will not rise. The Fed will not rise the Federal Reserve rates and so on. And for that, he started with the gold price suppression. I think so. Yeah? I cannot read his thoughts, and he hasn't published it until now. He still has some time. Greenspan, please do so. Yeah, that we know your initial thoughts. We can only guess. Yeah? So there is no bad connection between these two dates. If we have serious crisis situation or war, of course, an individual benefits if he has physical gold. Yeah, I think you can move to another country, for instance. You don't have the risk that stocks or real estates would have in case of these bad environments. Yeah, that's clear. I mean, this is also one of the reasons why historically people have a small storage of gold. In the past, at least in Europe. Regarding China, there are two different pictures. The one is the private market, and the private people in China are buying a lot of gold. And the second is the public sector, especially the central bank. The central bank also buys gold, but not much. Yeah, for instance, the Russian central bank did buy a lot of gold, compared also to the total reserve they have. In China, they don't have enough. There's a huge difference between these two countries. Yeah? China is in a lot of debt and not a lot of gold, the public sector, I mean. And in Russia, there's little debt and a lot of gold. So in my opinion, despite China has a better economical history in recent times, and also better perspective, because there are many young people, many engineers, and which Russia does not have. The financial situation in Russia is better, in my opinion. This is also an interesting remark, maybe for some investment, where I would say one of the very few stock markets which are appealing for me for the next years is Russia.
Good, good.